All right, well, today is Thursday, the 6th of November. I hope you are doing well. I'm going to try and make it through a weekly rate update with very limited data, y'all, so I can tell you where we're at, and I can tell you some of what is moving the market. So we're going to dive right in and look at the numbers according to Mortgage News Daily. 30-year fixed rate conforming loan, national average, 6.29% today, y'all. We were at 6.33% 1 week ago. We were at 6.38% 30 days ago. For those that are curious about the damage that we talked about last week that the Fed chair did following the rate cut, took away any benefit that we would have seen from that rate cut. In fact, rates are still higher than they were before the cut. The day before the Fed cut last week, on the 28th of October, 10 days ago rather, we were at 6.13%. That was a 13-month low in interest rates, y'all. We were at 6.27% the day of the Fed cut. On the 29th. So the Fed did not do us any favors with this cut. I'm still getting calls, got one today from someone saying, hey, I heard the Fed cut rates. Yeah, and they went up, and they did the same thing last time. So take this as a good lesson of what we need to do to position ourselves before the next likely Fed cut, because this one may be a kind of a bit of a surprise for the markets. Fed futures still have a 71% likelihood of a 25 basis point cut at the next Fed meeting on December 10th. Y'all, we have a number of Fed indications that they are not going to cut in the dark, meaning that if we are still shut down or if we don't have any reporting due to the shutdowns, even if the shutdown has ended, but we still don't have data for reporting, the Fed is not likely to move at that December 10th meeting. Austin Goolsbee, he's the chairman or the president of the Chicago Fed, said that today, that the Fed is not going to cut in the dark. So take it with a grain of salt when Fed futures are trading with a 71% chance of a cut at that December 10th meeting. If we are still shut down, and if that shutdown drags on sufficiently long to where we're not going to get any jobs numbers prior to that cut, that's the big caveat. If we do, then we may have sufficient data to move forward with a cut. If we don't, I think it's unlikely that the Fed's going to do it. The reason that's important is a lot of that cut is currently baked into current pricing. As we get closer to that cut, and if this shutdown continues to drag on, then we're going to see more and more pricing getting pulled out of the likelihood of a Fed cut going into that meeting, because again, the bond market's not going to be caught off guard. It is absolutely going to price in what the Fed is going to do before the Fed does it. And when it becomes more and more clear that that cut's not going to happen on the 10th because of the shutdown dragging on, you're going to see interest rates go up as a result of that. It's a dangerous time to be floating, y'all. If you like the little bit of improvement that we saw today based on some private non-governmental reporting that we got, I'm going to get into that in a second, then grab it when you've got it, because there's no guarantee we're going to continue to see it. And in fact, the arrows for interest rates going higher are pointing upward right now because of the shutdown and how it's impacting this reporting. Okay, that horse has been beat to death. Challenger job cut report. Probably not something anyone has ever heard of prior to this call, unless you are one of the people that generates that report. But these are very outweighted reportings when you get any indication of where the labor market is, absent the government data that the shutdown is depriving us. And right now, that Challenger job cut report was much weaker than expected, y'all. It is putting jitters in the marketplace. It's why you saw a big sell-off in the Dow Jones today, down almost 400 points on the day, 0.8%, almost a 2% drop in the NASDAQ. So the equities are selling off sharply on that news of a weakening job market. Bonds actually got a bit of a bid. We were about 1/10 of a point higher yesterday than we are today, and that's owing to this reporting. Also owing to the fact that a lot of the money that was in equities has moved into the bond market, so that little bit of a bid that it's put into fixed income securities is giving us a little bit of a reprieve in rates, at least stop the bleeding that we have seen for several days, especially post-Fed. All right, I know that's a lot of data, y'all. Good to see a little bit better pricing today than we saw yesterday. Not nearly as good as we were before the Fed cut interest rates. So we'll keep an eye on it. We need government data, y'all, to figure out exactly where this is all headed. So let's apply whatever pressure we need to get this shutdown ended. We need to get back to normal business, and I'm looking forward to doing exactly that. Again, I hope this information is helpful in informing your customers and clients, limited though it might be. And I am always blessed and honored to have your referrals. Thank you so much for all the business that you have sent us this year. It means so much to my family and me and to my whole team to have folks trusting us with big life decisions like this. We never take it for granted. We're always blessed to have it. Stay blessed, stay safe. We'll talk to you next week.